Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, June 6th, 2008. Well, Bloody Friday is what we're coining here, guys, because what a massive sell-off today across the board. And it was just yesterday that people were questioning our call for a down week and questioning our call on a market fall with the massive rally we had yesterday, and today that was all put to rest as the markets came down very, very hard. We saw massive selling on heavy volume across the board. No sector was really spared except for a little energy, and the Dow was down 394 points, almost 400. The Nasdaq was down 75 points, and the S&P was down 43 1/3 points. Across the board, a massive sell-off, folks. No doubt about it. And overall, the indexes were down about 3%. Basically, you have on the daily charts now a major reversal candle. And this is what we were talking about yesterday. Those of you that have been with us knew we had called for a drop in the markets Monday, Tuesday, Wednesday, going back a week plus before Monday. And we had talked about that drop happening. And then as of Wednesday, we shift our stance to a neutral stance. And this was the reason we did this, alright guys? And those of you that remember the video, remember we mentioned it could go up, it could go down. And those were the exact words I used in the video after Wednesday's last decline. And this is exactly why. Because it's a chop shop. I mentioned this term yesterday. You had a huge rally yesterday, an even bigger drop today. And those of you that know and have been watching these videos, remember what I've said in the previous couple videos. This market is not a swing trader's market right now. It's a day trader's market. And it continues to be that way as intraday plays are king and swing trades are getting crushed. Because yesterday, all the shorts in the market got taken out on the big move up. And today, all those shorts that had reversed to the long side just got taken out on the way down. So it's a chop shop in that regard. Ugly sell-off with the indexes across the board down 3%. Now, we're going to go over a bunch of things today, guys, but what a massive sell-off. But we're going to look at oil today. We're going to look at gold today. We're going to look at the overall market projections. Where are we staying on our analysis here? Are we seeing more downside? We even have a couple levels to watch. Are we seeing more upside? What are we seeing here? I'll tell you right now, we're going to continue to call, and let me repeat this, we're going to continue to call for this market to be a chop shop, all right? You're going to have moves up, you're going to have moves down. So we're going to call for a choppy neutral position here. And this is the neutral. Whenever we're in a neutral position, you notice it's always when it's a bad swing trading market and it's a good day trading market. So neutral position meaning you're going to have up moves and down moves along the way, and they're going to be sizable. And we started to see this week after our 3-day sell-off that we had called for Monday, Tuesday, Wednesday, and then the massive volatility from yesterday's rally to today's fall. So again, a neutral stance with choppy trading expected with a slight bias to the downside. We do believe there is a little more downside, but as a swing trading market, it's almost impossible because of the volatility here. So be clear on that. Choppy market, slight downside bias continuing, but you have to expect days where the market's going to rally big and then days where the market's going to fall big. Alright, so let's talk about what happened today. I'm going to go to the intraday chart here. Number one, first, check out InTheMoneyStocks.com. Go to that website. Go check out the intraday stock chat, the E-Mini chat. Unbelievable chat, guys. I can't tell you how proud I am of everyone in there. They're making money hand over fist today. Just unbelievable in the SDS and the QID today. Various plays like that, going short Apple and so forth. Lots of fun plays out there today to be had. Alright, guys, so come check out the chat room. We encourage you to join. We teach in that chat room. Alright, we answer questions, and along with that, we talk philosophy, we talk technicals, and you can ask us any questions you want. We'll answer them all to the best of our ability. All right, and we trade alongside you guys. Everyone calls out trades in the room, whether it's us or other people, and we talk about support, resistance, and anything else. So come join that. Come join the swing trade alerts, as I mentioned, and let's take a look at the intraday chart. So what happened today? As you can see, this nasty fall in the futures, and this is the ESM8 contract, which is the June 08 E-Mini contract for the S&P 500. And you guys can see we're basically trading flat here into an employment number today. Now, the jobless claims today, the employment was really nothing spectacular. It was pretty much in line, but the shocker here was that the employment jump was the biggest jump from last month to this month since 1984. Alright, that's a big-time jump, guys, and that scared the market, and initially you see the selling started right here. This is when it came out, no doubt about it. Trading flat into it after the monster rally yesterday. You see that spike down, and the selling just cascaded into more selling, into more selling, into more selling, into more selling. We had a little bit of a pause, and I want to show you guys this. You had a little bit of a sideways channel created midday to early afternoon, and you guys can see that here. All right, and then we broke down from that point, got a little bounce, and notice where the bounce took us back to. You line up these lines here, and it took us right back. We tested that line on the breakdown area, and you started to sell again. So you can see these technical levels. If you can see them and draw them in on your charts, they're great. I mean, a short opportunity right there is perfect because you're coming right into the 20 moving average and the top of the bottom of the channel you were in before, and it's another shorting opportunity right into the close as a hard sell came in. And volume today was exceptionally heavy. 2.769 million contracts. That's the most volume we've done in this market since Bear Stearns debacle. Okay? And that is significant, guys. And you guys know we've been constantly cautioning on that light volume up moves are very iffy. Like yesterday we saw slightly lower than average volume, but the previous Monday, Tuesday, Wednesday volume was heavier than the Thursday rally volume, and the rally was huge yesterday. You would have figured it would have been heavier volume, and it wasn't. And that was also, something that this choppy market's going to yield, all right? So understand that and understand where we're coming from in this respect. Overall, phenomenal volume today. So, again, the employment data was a big issue today, guys. That was a shocker to the market. They have no answers. And, again, we just read the charts. We just know what's coming. That's why we went to that neutral volatility stance, is because you're going to get a choppy market here. We think the choppy market lasts through options X. Looking ahead, there is going to be a turn date where we start to see a massive rally, we believe, but it's not yet, and it's not for a little while yet. So hold your horses on that. Continue to be ready for the volatility, for a little more downside. On the ES futures and the E-Mini here, the E-Mini contract, 1365 was our call. Everyone was doubting yesterday when we rallied and went higher that it would be hit. Today it was hit. That was our first key support level on the E-Minis, 1365. On the next support area here on the E-Minis is 1349. And you can match this almost identically to the S&P. Not quite, but almost. So 1349 is the next area that is a possibility, and should we get through 1349, you're looking at 1329. Alright, so those are the key levels. We talked about those in the chat room, and we will release those. But nonetheless, remember, guys, a choppy market with a slight downside bias. So you're going to have days where you're going to drop, maybe today was a little excessive, but you're going to have days where the NASDAQ and the Dow drop, respectively 1 to 2%. But you're also going to have days where you're going to rally up that much, and people are going to start saying, oh, are we going to rally now? So you have to understand that that's the type of market we're in, and you got to trade it appropriately. And for us in the chat room, it's a better day trading environment than swing trading or just scalp trading. Something you hold overnight on a down move like this. Oftentimes on Monday, you may see a little follow through to the downside, but overall, you probably look for a flat market or a small bounce coming in next week, early next week, and you can play that for a quick scalp here and there, but you don't stay in positions for very long. Nothing more than 24 hours-ish or thereabouts, because you want to be in and out and be ready for the next volatility spike. Alright, so what else happened today, guys? The big news, USO and oil. What a massive move on the USO today, up $7.81. Oil was up $10 today, blowing out to the new highs here. Unbelievable. You just have to scratch your head. Now, what was the cause of it here today? What happened with oil? Why was it up so much? Number one, the employment data killed the dollar. You know from us, whenever the dollar falls, it's going to make oil go up. It's just the way it works, guys, because oil is traded in U.S. dollars. Therefore, if the dollar gets weaker, the price of oil has to rise to stay at the same price. So that's number one. Number two, you had a talk from Israel that there possibly will be a strike on Iran, and the U.S. supposedly okayed it, although the U.S. came out and said they deny that they did not, and so forth. Either way, that was another catalyst. This is a geopolitical event that also causes a spike in oil, and it has to be alerted to always and be aware of that can happen at any time. Any way you cut it, a huge move in oil contributed to the down move in stocks, obviously, as, let's be honest, guys, people are hurting out there. The employment data showed it today, with the largest jump from last month to this month since 1984 in unemployment, to 5.5%, I believe, and you just imagine you got all these unemployed people now, and you're talking about gas being over $4 a gallon pretty soon here across the country. In many places like New York, it already is well above it, and California, but it's only going to get worse. So the stretch on wallets of the middle to lower class is getting worse and worse here, and that's going to just drag down consumer spending and all the rest. I mean, food and energy are the major components, and that's what's costing the most. So in any case, ugly day on as oil spiked today, and you can see, look at this move down right to the below the 20. We recaptured the 20 yesterday and off to the races today to a new high. We'll see what happens coming into next week. It's going to be a volatile one, no doubt. Although you may, again, we always talk about a pause day after a big move like this. We'll see if we get that pause day on Monday. Asia will get hammered Sunday night, I have no doubt. So keep that in mind, guys. So that may contribute to a little bit of a down move early in the day, but we'll see where the day ends on Monday for another piece of the puzzle. Okay, let's look at the SPY daily so we can just quickly go over what we're talking about here. Look at this volatility here. The big move up yesterday, the big down move eclipsing that up move, and we came to new lows. So let's talk about support lines here. Let's draw out where we are here, and you can see there. Watch for possible support of this gap window here. This could be the next area should we come a little lower. But remember, choppy trading, guys, means we could go up big, we could go down big. And we're continuing with our neutral stance here as it's a day trader's market. Notice the volume today. Look at the size of that candle, trading all the way back to Bear Stearns right here, guys. And that's what you have. We talked about the volume. Have a wonderful day, folks. I hope everyone was okay today in the markets. Take care. Come join us. We'll talk to you soon.